What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today on the 6th of May. Here we are at about $94.2 thousand. It's looking like this little leg of hope that we had to bounce off the 60 is not going to come to fruition, and instead the inevitable price of 88,000, or at least what was it, 92.7k, something like that. Let's see, hold on, 91.8k. I feel like that number keeps changing. Why do I feel like that keeps changing? Anyways, yeah, that's the expectation at a minimum, but truly I am expecting we see 88,000, if not somewhere in between. Generally speaking, you don't find support at the 236 and continue to run. Maybe you find a little bit of support there and then you break through and you hit the 382. This is often the time where you'll continue to run as the 382 or the golden ratio or somewhere in between, or lower fibs even. The deeper retracements can happen. But with Bitcoin's current trajectory and with just the overall environment that we're in crypto right now, I don't see you dropping too much lower than 88k. 85, okay, maybe 85 and a half. I could see that happening, but genuinely, I don't really expect that we're going to get below $88,000, or if we do, not really too much below $88,000. But there is hope to find support at 91.8k. You know, this is exactly what we did here. Sorry, that was loud, probably. You know, we consolidated for a long time, moving sideways, and we held support at the 236. We wicked a little bit below it, you know, but held support right there. Could we do the same thing here? If we do, it's very, very bullish, but I'll tell you what, that's rare. It's very rare to see a 236 bounce. I'm telling you, like out of any fib retracement, any of them. I mean, I bet we could go through 10 of them right now, and not even one would be a 236 bounce. I like to say it's less than 10% of the time that you get these things, let alone two in a row. But sometimes things trend, you know, so sometimes you do trend with certain fibs, and that could happen here. I mean, you're clearly holding up, and not financial advice, not a financial advisor. 2 days ago, I did say we're gonna consolidate one of two ways. We're either gonna consolidate by fire or by time. It's a trial by fire or a trial by time. And the time trial is going to be more boring, right? But it'll still work out. And the fire trial, it'll be exciting. It'll shake people out. We'll get out. You know, $88,000 will probably give a lot of people a reason to get in, and then also a lot of people a reason to get out, and then we'll start moving up higher. You know, there's a lot of bears out there right now who are calling this a bull trap. So this, and then there's a lot of bulls who don't believe that. They call that bear. You know what? Bear caca. But there are some bulls out there who are scared, who are skeptical, people who you know, they might be buying the narrative that this is a bull trap, and a move down here might just confirm it. Oh no, we're rejecting, this is a bull trap, I know how this goes. But right then and there, that's actually the worst time to sell, and we'll probably recover. Not financial advice, not a financial advisor. I don't think that we will probably recover. I actually think we will recover. I think it's a definite thing. There's nothing stopping this thing from going to new all-time highs right now. It's just time at this point, time and a little volatility perhaps. Hold on. Speaking of which, today is the 6th. We have the FOMC meeting today. I tried figuring out when, but you won't tell me, Grok, and they haven't told Grok or anybody, so I don't know. Fed started to increase balance sheet. QE is here. Brrr. Yeah, so I think we're gonna have a positive reception as far as the FOMC meeting goes. If they really are, I haven't read into this. This is just something that I saw from Ivan on Tech. By the way, you guys should follow Ivan on Tech, or let's see who else. Let's see if there's any other people that you should follow. None of these guys. I don't follow all these guys. I follow Willy Woo and Economic Ninja, but this is just the For You page. I don't know. Anyways, getting back to this, if this is true, and I haven't looked into it, but I'm assuming it's true. Ivan on Tech doesn't just say things. I mean, I'm sure that this is true. He's looked into it. That's a big deal, guys. That's a really big deal, and that should if you're unaware of what QE is, quantitative easing, just understand that essentially means that risk on assets, Bitcoin, crypto, any kind of low cap stocks or cryptos out there, they become what's the word I'm looking for? They become more attractive. They become more attractive, right? This is the time whenever we see QE come in. It's oftentimes whenever, like Ivan said, the money printer goes brrr, and we literally start to climb because there's just an inflow of money, lower interest rates, and just also lower interest rates themselves don't necessarily imply quantitative easing, but quantitative easing is whenever we're adding things to the balance sheet, not taking things away from the balance sheet. Essentially, we can even ask Grok, because I'm not even fully. I don't have the best definition. Let's see. What is quantitative quantitative quantitative. Yeah, there we go. Easing. What is quantitative easing? Monetary policy tool used by central bankers like the Federal Reserve to stimulate the economy when traditional methods such as lowering interest rates are insufficient. It involves the central bank purchasing large quantities of financial assets. Yeah, that's essentially it, right? Anyways, if that's going on today and we get that positive news, not financial advice, not a financial advisor, here we are at $94.2 thousand now, we'll probably get some volatility. And do not be surprised if we get positive news and we still drop. Don't be surprised, guys. It happens all the time. Don't be surprised if we get negative news and we pump. You know what I mean? Today we might get the news that happens exactly the way that we thought it would, but then once the news comes out, it's not as big of a deal as we thought it might be, if that makes sense. At least not in the short term. Oftentimes you do buy the hype and sell the news, and I'm just saying right here, if we're looking at this for what it is, we're looking at this overall price, and I knew nothing about technicals. All I knew was today was the FOMC meeting, all right? And here, a whole month ago, that was the low. I would easily call this a buy the hype and sell the news event. You know what I mean? Like this, clearly we're at the top of this move. The event's coming. This has been a long way to move. Just because we're talking about it today and a lot of people have been more focused on it this past week because it's coming up doesn't mean that the big dogs at the top, the guys and girls who have a lot of money at their disposal, who can get into the markets, doesn't mean that they weren't doing that right there. The anticipation of this event being dovish, quantitative easing coming into play, interest rates dropping, those kind of things, right? The Fed taking a pivot as far as like being dovish on the overall markets. That's been anticipated to happen, not just since a month ago, but for months, at least for 2 months, if not more. Like genuinely, this has been a long, May's FOMC meeting has been anticipated as bullish. So it makes sense that a month before, and that's normally how you see it, it's like a month before or 2 weeks before that you start to pump, and we got both. A month before you pumped, 2 weeks before you pumped. We've got the buy the hype effect right here. Are we going to buy the hype and buy the news? That's not what normally happens. So I'm expecting buy the hype, sell the news to hit. Again, forward thinking, right? Everybody's going to say that after the news sells, and we'll say that too after the news sells, but we're trying to think a little bit ahead, right? And just classic kind of scenarios. Not every time that there's good news or news does that mean that you have to sell. Sometimes you sell before the event, whatever. But I think that we will today and tomorrow will exact this bearish return to the downside, of which will probably stop at $88,000, somewhere around there. That's my thoughts. I don't think that we go too much lower, and then inevitably we're going to go higher. Let's build a case for that now. So from a high to a low, or all-time high to the low here, you're at the golden ratio. It's extremely common when you're at the golden ratio to bounce off the 0.5, to bounce off the 382, or bounce somewhere in between those zones, right? And then continue on your merry way. The next target area would be the 786 and 886, and that's at about 101 to 104 and a half, something in this area. Not financial advice, not a financial advisor, but sometimes in extremely bullish circumstances, what you'll do is you'll go above the 886 and you'll stop between the 886 and the 100 level, which is 104 to $109,000, right? We could stop there. You could even pursue higher prices in extremely bullish environments. You do proceed higher prices, but if that's the case, I would expect we don't go below the 0.5. Generally speaking, in Fibonacci retracements, when you are in a very bullish environment, you do one of two things. You either just continue, you consolidate through the golden ratio and you continue, don't even retrace, or you just rip through it. Or number two, you bounce off the 0.5 and you don't go lower. I am anticipating you go below the 0.5. Therefore, to me, the likelihood that we stop somewhere in here, or at least at the very most somewhere in here, I think the likelihood is good. So $100.7 thousand to 109.4. I like that 104.6 level personally. I like that a lot. If we take a line right here and we put it right there at the 886, it's okay if you go a little bit above it or a little bit below it, whatever. It's right there. That's right there at our all-time high weekly close. Okay, we haven't had a week close higher than that. It's right there at that level. So that's where I think we're going to go. The goal for this month is the same as last month. Get above. Let's get a new all-time high on a monthly close. We get a new all-time high on a weekly close, new all-time high on a monthly close, new all-time highs on dailies. It's inevitable that the market will only shift to one directional view, and that's up, right? I very much believe that we're going to see new monthly all-time highs, but by the end of this month, the real expectation is to go somewhere around 130 to $140,000. That's my expectation personally. If we take this high to this low, you can see we have some fib extensions. Once you break above this line here, about $104,500, when you break above that line, when you break above the 886, you will see immediate access granted to this area. Okay, now does that mean that you're going to run all the way up to the top? Maybe, maybe not. You know, does it mean that it has to happen as soon as you break above here the next day you're all the way up here? Maybe, maybe not. But inevitably, I mean, and at a faster pace, you will continue to grow up there. And I don't think that we stop at 121. Call me crazy, not financial advice, not a financial advisor, but as far as standard procedures go in a bull market, you don't consolidate for over a quarter of a year, but we did in this one, right? This consolidation phase is akin to what we see in our halving time consolidation phase. We've had 3 very significant consolidation phases, okay? None of which, let's actually go through this. None of them stopped at their 1272. None of them did, right? High to low here, 1414 just above there. Whether you want to take it from there or not, maybe it's here and then you went above the 1886. I don't know. However you draw that one, because that's still in the bearish trend. But here you have your high to low in the bullish trend. High to low here, you did not stop at the 1272. You didn't even stop at the 1618. You continued, you shredded all the way up to the 2618, right? And then past that, much past that, from a high to a low here, you went right to the 2618 again, right there. From a high to a low here, I think it's the 1886 this time, if I'm not mistaken. Yeah, you went right to the 1886 200 area. So not financial advice, not a financial advisor. I don't think that you spent this dramatic amount of time consolidating like you have before just to stop at the 1272. No way. I would be surprised if this stopped here, right? But by the end of the month, by the end of May, we're expecting that you're at about 130, 140K. I'm thinking 140. By the end of June, we'll continue to grow. And I think that by the end of June, if not very early July, we'll be as little as 160, if not as high as 180. That's the expectation, right? The minimum target comes from the fact that if we took every move that Bitcoin's had and we look at them, we look at them individually, you can see like this move here is smaller than this move. This move's bigger. This move here is smaller than this move. This move's bigger. This move here, which is smaller than this move, is bigger than this move was. You know, the moves are getting bigger as time is going on. And if we input all of these moves from this low here, the minimum target we'd get would be 155,000. Well, if we're going to see a larger move as the cycle progresses, and that's how it happens. Every single cycle we see larger moves as the cycle progresses. Then odds are at a minimum, bare minimum, if it's 155, we'd see at least 160K. But I think we're going to go above that. I think we will see something around $180,000, if not $170,000, by the end of June, if not the first week of July. And that's the overall expectation. So don't get thrown off by the short-term stuff, right? We've come a long way from in this discussion, right? The very beginning, we're very focused on this. It's going to be a big day, a big couple of days. You zoom out and you talk about what we were just talking about. It doesn't even matter. It's a fart in the wind. It literally is. Like, what, you're gonna worry about this? You know what I mean? Like that's what we'd be worrying about. It's a fart in the wind. It doesn't matter at all. But if you're looking at the short-term time frames, not financial advice, not a financial advisor, if you're looking at the short-term time frames, you can get distracted easily and potentially promote fear within yourself. Don't get fear. Don't feel the FUD. Don't worry, right? This is not a bull trap. It's a breakout move. We're back testing prior resistance as you do in breakouts. It's very common, and then continuing to run a bounce. I promise you, man, not financial advice, not a financial advisor, but I promise you, a bounce off the 382 is super bullish. A bounce off the 236 even more so, right? We're in really good standings right now, really good condition. It's just I think we have a little bit lower to go. That's all I'm trying to say. So I got nothing else for you guys. Hit the like button, subscribe. Thank you all for being here, and I will see you on the next one. I do expect volatility to happen during the FOMC meeting. I'll be watching that myself. I think everybody should, but you know, it's kind of boring. So we'll see. Anyways, take care. Bye.